Aquiles Larrea, the man, the myth, the legend. I always tell you that because you know.
¿A dónde?
Achilles, it is a Friday. We were just recording our segment for our Spanish show, but it's a weird Friday. Friday with inflation. Friday with threats of probably more tariffs. What type of Friday is this, man? It cannot be Friday, is it?
It's a wise up with your money Friday. It's
Oh well, yeah. There you go.
always an opportunity. Now imagine we got inflation numbers that came out at 3%, haven't been there for a while. Not important that we haven't been there, but more important that it's going to stay on course. The Fed now sees this inflation. Now, remember, the Fed's going to take out the numbers. They look at core inflation which is without the food, without the variable factors that's normally in those inflation numbers. So they're going to take out those numbers. And what we see is a flat 3%. If we were to look at the other percentages, much ado about nothing. Not a ton happening there. But this is going to lead us to more rate cuts. We're going to have, there's like a 97% certainty that we're going to get a rate cut this month.
Which
We're
is
not
good,
going to
I
have
would
any.
say, isn't it?
Right.
Okay, go
Yeah,
on.
absolutely. And the markets love this stuff. But we're also going to see another rate cut. Should it continue, we're going to see another rate cut for December. We don't have anything in November because of Thanksgiving. But then we're going to see another rate cut, in my belief, probably for January of 26. So these factors are buoying the market, are making investors confident and companies alike confident that they are going to make money in various markets and various opportunities that are out there, because when inflation is tamed somewhat by these cuts, prices should go, ideally, they should go down. Not a guarantee. I mean, we got high costs of living right now. We have high unemployment and somewhat high inflation. But this is the one thing
You
that the
say
Fed.
somewhat like you're not worried about having an inflation 3%, which is not very high, but is the
Oh,
highest
no,
it
no,
has
no. I'm
been
not saying that
the
at
whole
all.
year, besides January when Trump took office, right?
Yeah, hold on. I'm not saying that at all. What I'm
I mean, I'm trying to
saying.
translate,
Oh, yeah, 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 yeah.
to
No,
myself.
absolutely. But imagine the Fed fund rates come down another 0.75% by the end of February, right? This is going to free up economic growth. This is not going to stagnate the economy. What ends up happening is that home prices could go down. The cost of buying goods goes down. It could have this domino effect, which is, it's a hope, but it's not a given. We have seen in other occasions when the Fed does lower interest rates that the home goods actually, the home prices actually go up. The home prices are more tied to the 10-year treasury than they are to the Fed overnight rate, which is a much shorter measure. But there is ample opportunity for corporations to make more money, thereby continuing the record profits, continuing these great earnings that have been coming out. And as I mentioned in our previous discussions, right now we're still seeing a lot of selling going on right now in certain sectors, but the markets love this stuff. They love when when the Fed starts cutting rates, and the possibility or the potentiality of that money going into their pockets and growing the economy. That's another thing. They hope
And that's
by
actually where I'm
doing this.
heading because I was just looking at the markets. This is how they are right now as we speak. 47, it's up 500 points. I mean, 1.13% up the Dow Jones as we are recording this, which is almost closing time. What does that tell you? What are the markets reacting to? It's not the inflation. right?
No, they're reacting to certitude that they knew from the start that these cuts needed to happen. So now that this is becoming more apparent and more certain, they love this kind of stuff. And they're, people who are in the market right now are making more money. The corporations are making more money. There's, profits to be made. And guess what? I don't think we've scraped the tip of the iceberg in certain sectors. Like artificial intelligence, I've talked about nuclear power, I've talked about with you. There's just so much we could do at this particular point if we're smart as investors.
So, if you were to assess where we are right now, inflation 3%, it's a little high compared to other months last year, other months this year, highest since January. That's the context of this. But also, unemployment, it's tilting high. Uncertainty in those aspects. Are tariffs going to come? Are we going to continue with the trade war with China if they don't come to the table with a deal, like the president said a few days ago? Now the issue with Canada, no negotiation whatsoever with Canada. I don't know what that means. I think nobody knows what that means, because that's the second biggest partner of the U.S. If you want to challenge who it is, well, it's either Mexico or Canada or both. So where are we? How can you assess where we are?
Yeah, it's a bit of a difficult thing right now because, the Fed's operating without crucial data that normally comes in.
Also, a
And
government shutdown. So sorry, I forgot about that. That's there
yeah,
too. So
it all affects what we're doing. So now you got to ask yourself at this point, when it comes to the tariffs, we're talking about our largest trade partners. Canada and Mexico are our largest trading partners. We come up with the germ of an idea here and start the production, but Canada and Mexico are the ones that usually finish it. We get a lot of raw materials from Canada, to come to the United States, home building materials. So that's another thing that could affect us: home buying, home selling, and the like. New home constructions. We also have to also look at these tariffs. These tariffs were made to be a short-term measure. We talk about President Reagan in the past talking about tariffs. He himself said that this was supposed to be a short-term measure, not a long-term. That long-term, it could do a lot of damage to the country. And I hope this administration takes those words to heart, considering he was their most popular president. If we look back to in history, back in the 1920s, towards the late 1920s, as the Depression was starting in the 30s, the Smoot-Hawley Act, which was enacted by the Hoover administration, was supposed to, bring more tariffs to bear, and instead it plunged us into deeper depression, and we didn't get out of that for almost 10 years. So I don't think such an extreme example is occurring here unless it goes a lot longer than people expect. I think they are using these tariffs as leverage to try to get America, moving again short term. But I think overall the economy is somewhat challenged. And the challenge that will occur from this point on is not in the markets. The challenge is when we go to the supermarket. How much is rice costing us? How much is our typical goods costing us? And has it continued to go up? And this is something that I saw personally the other day. Like I mentioned, I always go to these. I went to H Mart the other day, Asian market. Why? Because it was cheaper,
yeah.
and the goods that I want are there as well. So I went there and I saw rice was up almost 12% from the beginning of year.
And salaries
You
are not
th
up, not even 2%.
Well, salaries are stagnant,
Yep.
so we have to press corporations, hey, if people are going to continue to work for you, They need a livable wage. And also healthcare. Healthcare, if you don't think it affects you long term, you're crazy. There has to be some solution devised in a bipartisan way, which is not happening right now, but in a bipartisan way. How can we come to an agreement? And that is what I see going forward for the future, the challenges going forward. If not, we could plunge ourselves, without wanting to, we could plunge ourselves into a recession, which makes nobody happy.
And something that we can agree on is that always among these situations, we can make money or we can take advantage of some situations like this one. How? Which is my question to you because I don't know how. How then, despite all the things we've mentioned, inflation, unemployment, maybe we don't have that money, how can we still try to get ahead? How can we still try to even invest or to maybe start a 401k, a freelancer like myself, that we don't have any 401ks or IRAs if we don't find a wealth management expert like you to tell us and wake us up and say, hey, you're losing time and money if you don't start doing this. How can we do it?
Well, you got to wise up with your money. You got to be strategic. You got to start looking in places where you think there are opportunities, obviously with the help of an advisor, but let's just take a piece at a time. Whatever you can spare as far as disposable income, you can absolutely make money. You want to look at technology, look at Microsoft, right? Going into this AI initiative, they're buying, this technology, they're full in because they know this is the future. You want to look at reactors, nuclear reactors. There's several providers out there. This isn't 3 Mile Island anymore, if you remember what that is. We're talking about modular, small reactors to power this hungry AI machine, because AI is going to drive the markets going forward. Everybody's going to be affected both positively and negatively by artificial intelligence, but we need, you can't get it with oil, you can't get it with solar. You're going to need nuclear reactors to power this type of initiative. Also, quantum computing. This is the next generation in terms of computers. You also want to be in infrastructure. I talk about Caterpillar acting like a growth stock right now. Can you imagine? Caterpillar was just one of the most conservative companies out there, and now there's opportunities to make money left and right with it. But you have to really be careful, not go all into any of the companies that I mentioned, and have somebody in your corner. You take care of everybody else. Someone like me should take care of you. That's where we make our money.
And I agree with you, and that's why you are the man. Aquiles Larrea, author, expert, and money-wise. So wise up with your money. You can actually get a book with that name. He wrote it. Amazon, anywhere you want to look for it. And also Your Money and You, which is the best way to have a relationship with your money. You got to talk about that. Your money and you. Aquiles, thank you so much. I wish you a happy Friday, happy weekend, and hopefully next week the situation is better for everybody.
Absolutely. Gracias, Rafael. Thank you, Rafael.
Un abrazo. Thank you.